Okay, good evening, everyone. Welcome to tonight's program, The Art of Being a Contrarian Investor, Buying and Selling Stocks. My name is Tim. I'm the host here with the Regina Public Library. I hope everyone is safe and doing well. Thank you for attending our program tonight. To begin, I would like to acknowledge that we are gathered here on the traditional territories of the people of Treaty 4 region, where the footsteps of the diverse indigenous people have marked this territory. Today, we are pleased to have our guest speaker, Benj Gallander, here to facilitate the discussion. Benj is the author of one of his bestsellers, The Contrarian Investor's 13 How to Earn Superior Returns in the Stock Market. He is also the co-editor of Contra the Heard investment letter, a columnist for the Globe and Mail, and writer for the Canadian Money Saver and various publications in the United States. He's joining us from Toronto. Just a friendly reminder that our session tonight is being recorded. If you have any questions, please feel free to type them in the chat, and Benj will make time available at the end of the presentation to respond to your questions. Okay, without further ado, I will hand it over to Benj, and hope you guys enjoy the program. Benj?
Well, thank you, Tim. I really want to thank you for inviting me here. Tim reached out to me. It was quite a surprise. I sometimes get surprises in my inbox, but not too many from Regina, not too many inviting me to speak there, never before. I actually had a play on in Saskatoon years ago because I'm also a playwright. And I was at the Playwrights Union meetings there years ago. And my partner at Contra the Heard investment letter, when we were in our early 20s, which is a few years ago, we drove across the country and stopped briefly in Saskatchewan. But I've never been to Regina, as I let Tim know. One day I would like to go there. I want to go there for football games, spend a few days. I've traveled to about 35 countries. I've worked in many, lived in a number of places in Canada, including way up in the Yukon. But Regina is on my bucket list, so I'll have to make that happen. I also want to thank you people for attending. I guess it's around the dinner hour there. Some of you might be eating as we speak. Certainly enjoy. I was thinking of having a bottle of wine. Well, no, making a glass of wine myself while doing this, but I'm sticking with water. But I try and sculpt my presentations to the audience I'm speaking to. So right now it's Regina and Saskatchewan. So I have to make a little change. You're going to have to put up with me for about 15 seconds while I get in the proper mode to speak to you people. I'm actually going to do this, it might end up being cut out. I'm actually going to have to do a little strip tease to get there. Oh my God, people are tuning out now. 1 second. So I don't know how well you can see it. My Saskatchewan Rough Rider sweater. So this seems to be more in tune with the group. Years ago, I was invited to do a FaceTime from an investors group in Saskatchewan. And I did it, and it was a lot of fun. And then months later, a huge package arrived in the mail with, let me show it again. with this sweater. And unfortunately, by the time it arrived, I didn't have the email address of the person who had set the whole thing up. And it was about 2 years after that, he recontacted me and said, I don't know if you remember me, we have an investment group. I invited you to speak. And I said, I always wanted to thank you for the sweater. And I like to thank people for gifts. I have some kids and I've taught them to do that too. So who knows, maybe they're tuning in tonight. So we're going to talk about contrarian investing. There's going to be some time at the end for questions. So the first question is, what is a contrarian? So we know in life a contrarian is a person who often looks at things in a different way. And I think I've always done that to some degree. I have 3 older sisters, and they would tell you that besides being a contrarian, they might say I was disagreeable, etc. But I wasn't disagreeable just to disagree. Often I just had a different way of looking at things. And when I started investing when I was late in my teens, I automatically looked at things in another way. One of the first stocks I invested in was Inco out of Sudbury, the huge mining company. And the thinking behind it was the miners were on strike. The stock price took a real beating. And I just thought at some point the strike is going to end, which it did. And then the stock price went up. So being a contrarian, often I'm looking at when markets are really cold and out of favor, when people are fearful, that's often when I invest. When markets are really hot, as they are now, that's when I would like to sell. So I try not to set the stage a little bit. When I look at markets today, people often ask me, what am I thinking about? And right now we have markets at record levels, never this high before. So automatically I'm questioning if they're too high. Price earnings are very, very high. At the other end of the scale, we have record low interest rates. So those record low interest rates are fueling the stock market because what's happening is margin rates are at record levels. Margin, as you probably know, is people borrowing money to buy stocks, which when rates are exceedingly low, I guess if you're going to leverage, that's the best time to do. I never margin. I hate debt. The only thing I owe is on my credit card, and I send in a post-dated check for when it's due. So margin levels have gone up 46% in the past year to the highest level ever. So what happens when stocks start to come down? There's going to be some margin calls. So people who have borrowed money, stockbrokers are going to say, you're going to have to pay us back some of the money. And what they're going to be forced to do is sell stocks. And as you may know, there are more novice investors now than at any time in history. As a matter of fact, more people have opened stock brokerage accounts this year than at any time in the past in this amount of time. So that means we have a tremendous amount of rookies and people are getting greedy. So I mentioned fear. At the other end of the scale, we have greed. People are seeing other people making lots of money, so they want to do the same thing, which can work for a while. It is working now. But at some point, things are going to change. Now, when that will be, I don't know. Back in 1999, as many of you may know, was when you had the tech bubble. And we wrote in our investment letter, Contra the Heard, we publish it quarterly, and we send out emails when we buy and sell stocks. We wrote that valuations made no sense. And I remember being cross-country skiing up north in Ontario, and then I went to the place I was staying and I was watching, I think it was CNBC, and the NASDAQ that day went up 500 points, about 10%. Made no sense. I was on this morning CBC Radio, which was the #1 rated radio show in March of 2000. And I said, the valuations make 0 sense. Many people were saying we're in a new paradigm. I said, we do not have new paradigms. What we have are new technologies. And at that point, there were a lot of new technologies that were in play. The internet was becoming more and more popular. Cell phones were becoming more and more popular. The information that people were getting was unbelievable. It was nothing like anything before in history. But that's going back about 20 years. Now we get information more quickly and from more sources than ever before. I sometimes wonder if this pandemic had happened in 1980, if the reaction would have been completely different. As you know, we are inundated with news about it. I have a Twitter feed at Benj Contra, if you want to follow me, at Benj Contra. And I basically put out about a week ago, and I said, oh, there's some news about Contra in the newspaper today. Sorry, news about COVID in the newspaper today. And I thought of it as a joke because we all know that every day in the newspaper, there's something about COVID, every day on the news. And somebody did write and respond and say, yeah, there are a lot of things about COVID today. But if this had been, again, if it had been 30 years ago, it would have been a different thing 40 years ago. Would we have reacted very differently? I think so. I'm not going to speculate if it would have been better or worse, but I don't think there would have been the same frenzy that there is in many respects. You know, if I was doing this talk in person, I probably would have started out by saying, how many of you know that there's a pandemic? Raise your hands. And of course, everybody in the audience would have known there is a pandemic. But even then, I bet only 50 to 75% of the people would have gone like this and raised their hands. Because often people don't like raising their hands. It's fascinating. It's fascinating how people often work in the same way. Our investment letter, Contra the Heard, we did it as a play on words. It's Contra, CONTRATHEHEARD. And it was a bit of a play on the Wall Street Journal, Heard on the Street. But we also thought of Contra the Heard, HERD, because we are contra the herd and the way that the herd thinks. So let me go over some of the rules that we follow when we invest. And I think you'll get an idea why we're different. And one of the things that's worth noticing is our historical returns are amongst the best out there. Our 20-year annualized return is 18.1%. If you go to our website at contratheheard.com, you'll see, you can look at the returns and you'll see we don't make money every year. We make money almost every year. But in years where the stock market takes a beating, we lose money too. So we lost money in 2000. We follow the pattern to a degree, but overall, we're far ahead. So what are some of the things that we do that are different? Let me just get one of my little notes here. Okay. So we have two portfolios at Contra. One is the president's portfolio that I manage, and one is the vice president's portfolio that's managed by my partner, Ben Stadelman, and also Phil McKellar, who lives in Victoria. Ben and I met at the University of Western Ontario, so it was a long time ago. As a matter of fact, I've been investing for about 45 years. When I went to Western, I was already investing. So we concentrate on turnarounds. So companies that are out of favor that we think can regain their luster. So I'll give you an example. After 2008, 2009, when you had the huge financial crisis in the States, I bought a lot of American banks. So one of them that you'll know of is called Bank of America. That stock had been decimated. I paid $6 and change for the stock. I ended up selling it a little while ago at $38.74. So a gain of 400% in change, plus I had dividends along the way. One of my best investments was when Ireland was having the financial crisis. I bought the Bank of Ireland, and I had a 10-bagger, which means it went up 10 times within a year. and I sold it. That does not mean that all of our investments work out. We've certainly had some bankruptcies. We've had some stocks go down. Our average holding period, as we measured years ago, was about 3.5 years. But we've held some stocks for over 10 years. So 2 were Service Corp and Stewart Enterprises, funeral home operators. One of the things I liked about those companies was they always have inventory in the pipeline. People are going to keep on dying. So for me, that was very positive. But the funeral companies had been decimated because they took on an incredible amount of debt. So they were badly beaten up, and after we bought them, they did very little. They did continue to pay a dividend. And one of my expressions is, dividends allow me to be stupid longer. As long as I'm getting a dividend, that means that I'm getting some return, even if the stocks I buy go down. Now, as it turned out, we ended up selling the 2 companies for 400, 500% gains. And as a matter of fact, Service ended up taking over Stewart. So we waited a long time, over 10 years, but that's very tax efficient. And when you're getting gains that are that big, if you wait 10 years, if you wait 20 years, it doesn't really matter. So to us, that makes sense. We're always looking for home runs and grand slams. I don't buy stocks now for the portfolio that I don't believe can go up at least 100%. Let me just grab a little drink of this water, not wine. So I'm only buying into companies that have been around for at least 10 years. So nothing new, nothing exciting. I'm not buying into new cryptocurrencies. I'm not buying into the marijuana stocks. That does not mean you cannot make a lot of money in those. It just means that I won't. As a matter of fact, one of the companies that I'm on the board of directors of, Data Metrics, they actually have a couple cryptocurrencies that they're working on. But at this point, quite frankly, they haven't amounted to all that much. So I've got it as a bit of a play in that company. But for the Contra portfolio, and we've been doing the investment ladder for over 25 years, only companies that have been around for at least 10, nothing on the venture, only TSX companies and companies in the States listed somewhere. But I like to diversify. So some of the companies that I own, one of my favorites is Banco Santander, which is an ADR in New York. It's Spain's biggest bank. It's a huge bank in Brazil. They're also in Poland, the Ukraine, the US. So it's a leader in the field. We put it in the portfolio at 205. It's around 375 now. I think it can do better than a double. And they eliminated their dividend because the European regulators asked them to do it. They asked all of the banks in Europe to do it. Now they are being reestablished, and I think it could go up a long way. So another thing we do is we carefully analyze corporations' financial statements. So I have an MBA degree. I used to teach a course about starting a small business. One of my best-selling books was the Canadian Small Business Survival Guide. If you go to our website, you can order both the Contrarian Investors 13 and the Canadian Small Business Survival Guide. Both books said bestsellers. When I taught and when I was learning with my MBA, I learned a lot about financial statements. Now, I think that most people can analyze financial statements. A lot of brokers and institutions will try and make you think you should not invest on your own. I think that most people can actually do it. So to me, it's something you might want to think about. One way to learn a lot how to do it is to read very, very widely. And I've always read a tremendous amount of books. Matter of fact, in the back of the Contrarian Investors 13, I have a bibliography of many books that I really liked. I write for the Globe and Mail. Ben and I write a column called the Contra Guys. Phil often pinch hits for us. And I read the Globe every day. I read Bloomberg. So reading is very important to learning. And my young lads at 20 and 17, I have something right now where 6 days a week, I try and get them to read an article so that they'll learn about different things. Excuse me. The article is not always about business. Often it is. The one today was about gold and where some people think gold's going to go. But it can also be about sports. It can be about financials. It can be about many other things. So if you have kids, getting them to read, and I like the idea of a newspaper, something not on the screen, getting them to read an article every day and then discussing it can be helpful. Now, I admit it, I bribe them. I give them $10 a week to do this. So is it worth it? I think in the long term it is. So we look again at financial statements. I focus on debt levels because in the past, one of the major mistakes I made was buying into companies with debt levels that were too high, and then they often got burned, sometimes went bankrupt. So I've learned that debt can kill. So what do we have now? We have a Canadian government that has taken on a staggering amount of debt. Provincial governments have done the same thing. Our Minister of Finance is going to spend $100 billion over the next 3 years. So that's $33 billion a year, approximately. That used to be a huge deficit. Our deficit has exploded. It's a major danger. In the United States, stimulus recently, $1.9 trillion. They had more stimulus previously. Governments in Europe are doing the same thing. One of the reasons they say they can do it is because interest rates are so low. So yeah, I'm talking stocks, but also we look at the micro level of companies. We also look at the macro level. So I think what our government's doing is very misguided. I think they're way overspending. I'm so tired of all the advertising about COVID. If you don't know to wear a mask and wash your hands by now, you're not going to learn. It's just silly how much money they're spending on certain things. There's so much waste. So at some point, hate to scare you, but interest rates are going to go up. This is a given. I don't know when. The US government and the Canadian government seem to be bringing nearer the time when it'll happen. When that happens, it's going to be tougher for governments to service their debt. When it happens, they're going to have to cut back somewhere. So I think it's a major, major problem. We all know this with our own personal finances. I think our government has made a major mistake in terms of not being more careful in terms of what they're spending. I look at it as a political budget. I voted, quite frankly, for all the parties, the major parties at different times. But I think it's kind of shameful the way they're throwing so much money out there. But let's go back to stocks. We often end up picking companies that get taken over. And one of the reasons is because we're buying them so low, but often they're not taken over when they're that low. It's when they start to return to form. Most takeovers happen at a premium price. So we make a lot of money there. If you go to our website, you'll see one section that is just takeovers. So it really helps if you can do that. One other thing we do is we analyze management's ability to reach their goals. So I look at old annual reports and see if what management says comes true. Some management is optimistic all the time. And then what happens is the company gets hurt for some reason. Things turn. I much prefer a CEO who says, we're looking at bad times ahead, or we're having bad times now. Because later on, when he says things are changing, it becomes far more believable. What we also do, as I mentioned before, alluded to, is we practice patient investing. That is very, very difficult for a lot of people to do now. But I think that'll help. So you have to block out the noise of the market and all the information that you get all the time. We advocate diversification. One of the problems with ETFs and mutual funds is they can over-diversify. So one of the chapters in my book is Beware the Devil of Over-Diversification. I think you can have a very diversified portfolio with 15 to 25 stocks. Some people say with as little as 6 stocks. That to me is low, but 15 to 25, I think it's fairly easy to do. Albeit, as I say that, at times, sometimes we've had some sectors that have played a major role. After the financial crisis, about 35% of the stocks of the portfolio was in American financials. It was in 3, 4, 5 different American banks at different points in time. So there was some diversification in terms of the banks, but it was stacked. It's even now, it's about 30% in terms of them. Banco Santander, I mentioned. First United Bank is in the portfolio I managed, and First US Bank Shares is also in the portfolio. Another thing we do that's different is we strictly limit the number of subscribers we have to 1,000. And some of you probably know James Pattison. You see his signs. He's a huge, huge billionaire out on the West Coast. He owns car lots, West Shore terminals, many things. He's subscribed. And when I was talking with the secretary, and I've talked with Jim, she said, why do you restrict your subscription base to 1,000 people? And Ben and I, you know, we like money and we wanted to make a good living, but we felt we could, even having 1,000 subscribers. It also means that we can give better service at the investment level. In general, I answer all the emails I get within 24 hours, sometimes 48 if it's a bit more complex. So it allows us to give better service. At this point, we're under 1,000 subscribers actually. And since I'm speaking to you guys, we're offering a special if anybody's interested. It's normally $680 to subscribe plus tax. Instead, it's $500. If you live in Saskatchewan with tax, it's $5.25. So you save a couple $100. So what else does our system consist of? I've combined a lot of different systems. So say when we're looking to sell, we want to sell into momentum. Momentum is very important to us. So often we're buying a stock at $2 or $3 or $8. We know when it gets over $5 and $10, that allows more institutions to buy into the company. That creates more momentum. That creates the stock price going further up, the old demand supply that I learned in Economics 20, pushing up the stock price, allowing us to have bigger gains. So that's important. We do market timing. So a lot of people, excuse me again, itchy. A lot of people, they don't like market timing. I do. As I said, right now, I'd be more of a tendency to sell anything than buy anything. Over the past while, I've bought very few stocks. When markets are out of favor, we buy in. There's an expression, sell in May and go away. I will do most of my tax loss selling in May because I know generally taxes don't do well at that time of year. I'll also do most of my buying in December because that's when tax loss season is on. Tax loss season pushes down the prices of stocks, so that gives me a chance to buy at a better price. I also know at the end of the year, you have what's called the Santa Claus rally in the first few days of January. On average, that means a gain of 0.5%. Sometimes it's more, sometimes it's less, sometimes there's no gain. but that gives me another advantage. So I'm looking at getting huge returns on the stock, 1, 2, 3, 400+%, but I'm also looking at just getting any additional increment that I possibly can. So that to me is absolutely critical. Now I'm going to go back to one thing I mentioned. It's very important to me to get dividends. Not all of the stocks that I own do pay dividends, but I really enjoy that. And in my book, I outline what I call the point tally system. And I give 1 point for different things. Management's a point, low debt levels a point, the amount I think a stock will go up. If I think it'll double, that's 1 point, triple 2 points, quadruple 3 points, and as many as 4 points. I want to see a minimum of 10 points in stocks I buy. More is even better. So I try to be exceedingly disciplined when I discover a stock, and I do a filter of every stock on the US exchange and the TSX about every 6 months. And I look at stocks that have come down about 33% minimum and have, again, a minimum of 100% upside. Once I discover that stock, I don't buy it for a minimum of 6 months, often for years, so that I can understand it better. In my book, The Uncommon Investor, which was another bestseller, it's out of print now, I have one whole page in the book, and it says, without discipline, you have no method. So discipline to me is absolutely critical. I'll just give you a couple other stock names. People always like having them that I like. One is Gold Resource Corp. This is based in the States. Mining companies usually have a lot of debt or some debt. This company has zero debt, about 25 million in the bank. It pays a dividend. It actually just split into 2 companies. The other part, that's Fortitude Gold. But Gold Resource, I think, can do better than a double. I paid $266. It trades a little higher than that right now. Another company that I like too is Black Diamond Group. It's a Canadian company. They do housing basically for oil and gas companies. They also do things that are kind of like shelters for schools, that kind of thing, portables for a lot of places. They've diversified. The stock has come back lately, but I think it could triple from this level. Very strong management team, so I'm quite up on that one. And I'll mention one bigger company, and first I have to preface by saying we sold 80% of this in this Wall Street Bets Reddit craziness that just happened, BlackBerry. And we'd held it for a while. We paid $10 and under, around there, a little over too. When it went crazy, it had done nothing for a long time. I sold from my portfolio with $24 and change. I sold 80%, as I said. I wish I had sold the other 20% when it was over 30. I made a mistake and didn't. It's back around $11. And just to say, I make a lot of mistakes. The first quarter of this year was unbelievable for us, the amount of transactions we were making, because we don't make a lot of transactions, but we were selling many stocks for huge gains. Portfolio I managed was up 30.1%. If I had been smart, it would have been up about 50%. So always trying to learn, always learning from mistakes, learning from what I do well. When I was a regular on BNN's Market Call, people would also often ask me, why do you talk so much about your errors? And that's because I can learn from them and other people can learn from them. So why don't I'll give you just a couple other things I want to make sure I get them in. One is I never use stop losses. A lot of people love them. I have mental stop losses, although I'm always watching my stock. The problem if you use a stop loss is, say if you do it 10% below the market price, most stocks go down 10% at some point. You would be stopped out of many of them. So to me, they're stupid. I also don't believe in dollar cost averaging. Dollar cost averaging means that you're buying stocks every month at a certain price, no matter what it is. I'm a bargain hunter. I've taught my kids very strongly, buy things on sale. When do I like to buy things? Often Boxing Week. I used to do Boxing Day, but it's too mad for me now. Although I can't go to stores at this moment, unfortunately. But if I can buy something at 50%, I save a lot of money. If I save $500 on a TV to price, that means I have to earn $1,000 to save that 500 effectively. So I don't like using dollar cost averaging. Doesn't make sense to me. I love buying things on sale, which is what I try to do. So why don't we open it up for questions? Again, thank you all. And maybe some of you will subscribe. Who knows? Tim, all yours.
Well, thank you very much, Benj. That was a really eye-opening session, and I think we do have a few questions in the chat here. Okay, we've got a question from Na. Can you type your website and the fund you manage? Can your funds be purchased on Questrade?
No, people pay normally $680 a year plus tax. And what that gives them is access to both portfolios. So whenever we buy or sell a stock, we send an email. So we bought a company about a month ago. So we sent an email saying, this is the company we bought. This is the price we paid. Here's our initial sell target or sell range. This is why we like it. And this is why we don't like it. So we're very upfront about the risks. People then make their own decisions whether they should buy it or not. We do the same thing when we sell. So if we sold something today, before markets went open tomorrow, you would receive an email in your inbox saying, this is what we sold. Our subscribers would know the company. Many of them would possibly own it. So we're not a mutual fund. We're not an ETF. People often ask me why we don't have a mutual fund. If I was Tim's age, right now, I think Ben and I would think about doing it. But at this stage in our careers, we don't want to. We were asked by mutual funds to start a Contra fund years ago, and we decided not to. We could have made a lot more money if we had done that. There's no question about it. Fortunately, we make money from the subscription, and fortunately, we make money from the stocks we buy and sell. So we're only telling people about stocks we actually do own. What we also do in that, we send out a release every quarter. So on April 10th, we sent one in every quarter after that, where we'll talk about some stocks that we bought that aren't in the portfolios. They can be preferreds or other investments, which gives people a wider array of stocks that they might want to buy.
Okay, we got another question from Jason. What sectors do you think have the greatest potential for growth in the next 5 years? Any specific companies to recommend?
The greatest, well, in terms of growth itself or stock market growth, I think right now it is a difficult time to look at a tremendous amount of growth. I suppose the marijuana industry is going to have big growth, especially as it becomes more and more legal in different parts of the United States. A sector that I like right now is a telecom sector. Because I think stock markets are going to come down before too long, telecoms generally pay a good dividend, and a lot of them are out of favor. You know, the cryptocurrency market, I think overall it's going to grow. That doesn't mean that the cryptocurrency prices are necessarily going to go up from here. A lot of them seem very, very inflated, And those of you who have a memory of 2-3 years ago, cryptocurrencies had gone way up, specifically Bitcoin, came way down and has gone way up again. So it's difficult right now to find sectors that are way out of favor. One that I've invested in recently is real estate investment trusts. As you know, they're out of favor because of the pandemic. So office space, a lot of companies have been closing some of their office space. The apartment sector's been hit. So two that I bought, one is Cominar. They are the largest REIT in Quebec. They pay a good distribution. I think they have quite a bit of upside. They are also looking to possibly sell themselves. The other is Artis REIT. It's out of Winnipeg. Also a very big REIT, pays a good distribution. So with these, you can get 4 or 5% as a distribution. And I think it has quite a bit of upside. The negative with Artis is they're remodeling what they do. And I think that that's really stupid in a lot of ways. It's going to cost them a lot of money. But in both of these companies, especially Artis, insiders are buying like crazy. So that's a good sign.
Okay, somebody mentioned EV stock, and any comments on Tesla and its skyrocketing stock price? Would it get its growth and momentum? It's already so expensive now. Should I still buy Tesla?
Well, I don't know what you should do. What I can say is I wouldn't go near it. The valuation makes 0 sense to me. You know, Elon Musk has done a tremendous job. The guy's obviously a genius. Can be a little scattered, I think. But Tesla doesn't market. Elon Musk gets his face out there and he markets the company. It's fabulous. It's free. It's cheap. The valuation makes no sense. And there is so much competition out there. One that I own, they don't make the cars, but it's called China Automotive Systems, CAAS, on the New York Stock Exchange. So they make a lot of engines, etc. That might be a way of playing some of these things. But there's a lot of competition out there that to me makes a lot more sense. If you go back, I forget, it's a year and a half or so now, some people were talking about Tesla going bankrupt. They were doing so poorly. Then they had this huge turnaround. I don't know if it went up 600% or so. It's insane. I don't like buying into companies that have done really well, but some momentum players might do it. It's not my cup of tea.
And somebody asked, do you think it's a good time to buy airline stocks?
We bought KLM right after 9/11. Airline stocks got completely hammered. And I was doing a book tour for the Uncommon Investor across Canada. Didn't stop in Regina. And I remember one person interviewing me in Halifax, and he went after me. And he basically said, how can you be so stupid to buy an airline stock? And I just said, well, airlines, people are going to fly again. They weren't flying at the moment. I said, first of all, now's a great time to fly. It's very, very safe. Plus, you can get tremendous bargains. And I also said, as the so-called third world develops, and I think I mentioned India and China, as people there become richer, again, this is going back to the early 90s, they're going to want to fly more. So there's going to be way more demand for airlines. So right now, I actually own Air Transat. The government's bailing them out to some degree as of today. You have to be very wary buying into this kind of thing. Some of the airlines in the States have come back a long way. Air Canada's come back a long way. So the ship has sailed to some degree, but there could be further upside. And of course, a lot more people are going to be flying, odds are, in 2 years as compared to now.
We also have some questions from the Q&A. One of the questions is, do you suggest that people buy index funds when you are a retired person?
Well, it's one way to go. ETFs are better than mutual funds because you pay a lower fee. And the MER, the management expense ratio, is key. If you can buy something that has roughly the same components and pay 0.5% as compared to 1.5%, that 1% a year really adds up. What somebody might want to do, even a retired person, is take a look at the index fund you're thinking of buying and look at the major components. What you can do is go and buy it, or you can go and buy those stocks at, say, a TD web broker that I use, or Scotia iTrade, or Quest Trade, or whatever, and it'll cost you $10 a trade. So you buy, and say you buy 20 stocks, that's $200. If you hold them for a few years and spin them out a few at a time, it's $10 a trade. Let's say, for example, that you have $100,000 to invest and you put it in an ETF and you're paying, or a mutual fund and paying 1% for easy number. That's $1,000 you're paying a year, as compared to the $200 initial investment and the $30, $40, $50 a year. You don't have to be an Einstein to know that doing it on your own can save you an awful lot of money. Now, again, one person can say, I don't have the ability to do this, but I think most people do. And perhaps by imitating the fund to some degree, you can do it on your own. And one thing I'll say is most of the people who are watching this won't subscribe. I get that. You can email me at gall@pathcom, pathcom.com. That's gall@pathcom.com. It's also on our website. And whether you're a subscriber or not, I'm happy to answer your questions. Some people ask me about stocks, but I don't know about most of the stocks because there's so many out there. But I do the best to answer the questions I can. And I probably say I don't know more than almost anybody who was a regular on Market Call, because I'm willing to admit what I don't know. Sometimes I say, I don't know the answer to that, but I'll look it up. Next time I'm on, I'm happy to answer it. Unfortunately, they've said they don't want newsletter writers on now. A lot of people wrote into BNN and asked to have me back on. Feel free to do it. I was interviewed by Mark Bunting just yesterday outside of BNN, something that he's doing, and he doesn't understand why. It's very unfortunate because I love doing it, and it was, I think, great for the viewers because I offered something quite different.
Well, we got another question from the Q&A. Do you think Asia, especially China, will be where the long-term future bull market will be at the expense of the USA?
Yeah, I think China is in many ways a great place to be in emerging markets, but markets go up and come down. So China does that too. I mean, right now, China has to deal with some political fallout because of some of the things they're doing. And that means that some of the other countries don't want to deal with them in the same way, but they are also very vested. China has a huge amount of money invested in the United States. If they pulled the money out of the T-bills in the United States and the US had to start refinancing a lot, that would be a problem. But China is a country that I would love to go to. It's on my bucket list. It's very, very high. I wouldn't want to go there right now just because of what's going on with the two Michaels. Although I think what we're doing in terms of the Huawei executive, I really don't understand why we put her in jail. But I think it's awful what they're doing to the two Michaels and some other things going on. But I would love to get to China at some point, and I think there'll be lots of investments. And it's an economy that's going to continue to grow fantastically. It's really it's a world beater in many, many ways.
Well, another question from the chat. Would you like to share the best intrinsic value formula, please?
The best, which formula?
He was just saying the best intrinsic value formula.
Oh, the best I don't know what that would be offhand. That would vary. I mean, if you look at our book, or my book, you'll see the point tally system that I alluded to before. Valuations can be crazy in many ways. They say often price is what you pay, value is what you get. And I like that quote. You can look at book value, but book value can be very misleading because often you've got a lot of goodwill on a balance sheet. And goodwill, for those who don't know, if one company takes over another company and they pay, if the book value of the company they take over is $5 and they take it over at $10, they're going to add the differential onto their own asset statement as goodwill. And to me, that's bad accounting. To me, it doesn't make any sense. It's permitted, it's completely legal, but it's stupid. But often what it means is later on, a company's going to have to write it off. So intrinsic value, I think, is a lot of definitions. And I saw one question go by about the clean energy space. I saw somebody put that up. I'll just hit that. Clean energy in many ways is a place to go now. I don't think it's going to expand quite as quickly as some people do. And I think a lot of companies are setting up these carbon goals and they won't be hit. A lot of countries are. I will say, though, I'm on the board of directors of a company called Char Technologies. The symbol is yes.v on the venture exchange. And they're very much into clean tech. It's interesting because the two I signed on with them about 6 months ago, and the stock was at 10 cents. Now it's about 60 cents. I'm not suggesting you should invest in it, but you might want to look at it. Clean tech is a really good space to be in. And Char, the one thing I can say is it's a fabulous board of directors, and I'm certainly not the best person on it. But different boards of directors, some of them you really have to watch. You have to watch the management. And this one really has outstanding people on it who have the best interests of investors at heart. And the company could potentially do well long term.
Okay, we have a question from Kim in the chat. Is there a term for individuals like me that focus on buying at the initial offering price? I have been investing in numerous plant-based companies that their initial offerings, some of which are ETFs through the Canadian Securities Exchange. These decisions are based on the way plant-based products are expanding rather than researching the company or debt load, as you indicated.
Can you go over that one more time, the first part of the question?
Yeah. Is that a term for individuals like me that focus on the buying at the initial offering price?
Got it. So what you're talking about is investing in IPOs, initial public offerings. I don't know if there's a specific term for people to do that. When I started investing in stocks about 45 years ago, and I'm only 26, so amazing, I invested in some IPOs. And I found I made money on some, I lost money on some. It's a very, very difficult game. And then I did research and I found that over 80% of them were down in value about a year later. So even one like Facebook, it went up and then it came down in value. But so many of the companies do this. So I think for people interested in investing in IPOs, often it's better to wait and invest 10, 12 months later. Sometimes it can be worthwhile because some of them do pop, especially in a hot sector. When marijuana was hot, they would do it. Some of the new high-tech companies, they're popping when they come out. So if you could get in and get out quickly, it can be worthwhile. But for the most part, it's a loser's game. The same way that most people who invest in options lose money, but a lot more people are investing in options now because it's very exciting. So I look at these things and say, what's the probability? What's the potential risk and reward? And in the system I use, I so focus on risk and reward. So make sure you do that too. Look at the downside.
Okay, next question. What is your personal opinion about cryptocurrency?
Well, I think cryptocurrencies are here to stay. Part of the difficulty is, so I've got a Bitcoin, what can I buy with my $60,000 Bitcoin? Or it's gone, I'm not sure exactly where it is today. There's a lot of money to be made on the cryptocurrencies. There's also going to be a lot of money to be lost. So people have to watch that they're not just getting sucked into them. It's dangerous. It's many of them could be a bubble. I would be very wary. Some of you know of the cryptocurrencies that have gone completely bust. And some of them are indeed used, and be ready for this, by people, mafia, criminal organizations, and they are not looking out for your best interests as an investor. So you have to be aware of that.
Well, it looks like we have so many questions left, but we only have 2 minutes left. So it looks like, yeah, there are so many questions. I don't think we'll be able to go through all of the questions within our time frame.
Yeah, so as I said, send me an email at gall@pathcom.com, and I'm happy to give my best answer. That can be the best way. This hour has gone pretty quickly. And it's on the website, the email address, contratheheard.com.
Okay, we have only 1 minute left. Just before everyone leaves, I would like to remind people that the library has a quick survey that I just posted in the chat. So if you can take a minute to fill it out for us, I will really appreciate it. Let us know what you think about the session tonight and what other topics you may be interested for a potential future session. Yeah, so I guess we are about time to wrap up the session for tonight. There's so many questions here. I would suggest that people contact Benj after the presentation, as our time can only cover this much.
And one thing Tim and I have talked about is getting me to Regina so that I can speak to you people in person. I would love to do that.
Okay, thank you very much, Benj. Really appreciate your time. And yeah, I know it's been late at your time, and thank you very much again. Thanks everyone for attending the session tonight. I hope everyone have a good evening.
Thank you very much. All the best to you all. And as they keep saying, stay safe, stay smart.
Stay safe. Bye, everyone. Bye, Benj.
Bye-bye.
Bye.